Hey guys, what's up? Welcome to my episode for my podcast. I got Kevin here today, helping out mortgages with Sunny. How are you doing today?
I'm great. How are you?
Yeah, good. Ready for the weekend?
Absolutely.
Nice. Thank you for always coming by. Today we're going to be talking about refinances and what's going on, how to utilize it, how to benefit from the current equity that you have. Kevin has some questions that he's going to go over today. So let's get rolling.
All right. So, obviously, we're talking about refinancing. I feel like we've touched on it a little bit in terms of, you tell people, don't take advice from me. You tell people, don't be scared, take the risk, because this is always an option down the road. So, maybe some people don't really understand, what that means to refinance, or might need a little bit more knowledge on how to go about that. But just, I guess, to start off, is what exactly is a refinance?
Yeah, great question. A refinance is changing the loan product that you're currently in and switching it over to a different loan product, or changing the rate on it, or taking equity out for your home from it. So it's just the actual mortgage, but just switching over the type of loan or whatever the case may be. Now, a lot of people have this misconception, then I'm going to have a higher loan balance. In this case, on a refinance, what's refinancing is pretty much the loan amount that you have left, okay?
Right.
Now, the only time it does increase on the loan amount if you take out equity from your home.
Okay.
So that's just a little recap of what a refinance is.
Gotcha. So there's a few different loan programs that you can deal with when refinancing. It's not just a strict one program to refinance. There's multiple things that you can do.
Right. So the purpose of a refinance can be for several different options. Either, for example, let's say you have a home that you purchased 10 years ago, and now that you have equity on it, you're looking to take out some money for a rainy day, to purchase an investment, to purchase another property. You can use that money, the equity from refinancing, and purchase another home from it. So refinancing is just getting a new loan or a different type of loan product. It pays off your first loan, and then now you have just one lump sum loan.
And how would that affect my rate if I was to refinance?
Yeah, so rates are pretty tricky. As we know, it is what it is in today's market. The rate is high, unfortunately. But every time there's a reason for refinance, it affects the rate. For example, if you're taking equity out on a property, the rate does factor in towards it more of a higher note. But if you're just doing like something that's a rate and term, the rate is always affected based on today's market. So back then, a year ago, they were at a 3%, but now they're like, wait, I got equity on my house. I need money for a rainy day. I want to take equity out. So yes, unfortunately, you will be locked in at a higher interest rate today, but that doesn't mean that you can't refinance 6 months or a year again to lower the rate, Gotcha. So your purpose of the refinance is always going to be something different, Take out money this time, but next time you refinance, you can lower the rate on that.
Got it. Okay.
Yeah.
Gotcha. Okay, so how can people benefit from cashing out on their current equity? I know you mentioned, possibly putting that as a down payment into another home, or what else would be the benefit of?
So you can always taking equity out of your home. Now, a lot of people say, well, I don't want to take out equity on my home because I don't want to be above beyond than what my house is worth. The benefit here is what protects you is that you cannot refinance or take out equity more than 80% of the value of your home, which means at the end of the day, you will always remain with 20% equity on your home. So you're never going to be 100% financed. You still have that flexibility and the equity on your home. Now, a lot of people, what they do is, example, right now, everybody's kind of flipping out. They're kind of worried what's going to happen. So they want to save money for a rainy day. They go ahead and pay off a lot of their debts. They could do that. Or their kids are going off to college. They want to buy another home. Cashing out is a huge plus, because what happens also too is a huge tax benefit. If you're cashing out on your primary home, it still is a primary loan, and you can use it for your tax benefit. And what happens is with the other cash that they do take out from the refinance, you can purchase an investment property. You know, it doesn't have to be within the current area you live. You can purchase somewhere else, so you can go ahead and pay off your debt. You can send your kids to college. You can go on your dream vacation, whatever it is, you know. So there's a lot of benefits of refinancing and pulling equity out. You know, I'm telling people, I'm like, hey, yes, the rates are high. A lot of people are intimidated, but the equity is there on your home. Do it.
Utilize it.
Utilize it. Take it for a rainy day, whatever the case is. Let it sit there. That's fine. You can always refinance and change your rate 6 months to a year from now.
And for the people who would want, maybe they have a lot of equity but don't know a reason right now to pull equity out. There's always a home equity line of credit, which they refer to as a HELOC, right?
Yeah.
So those are, for the people maybe who, like you said, maybe they don't have the need for the cash right now, but for a rainy day, you have the equity in your house. Why not pull it out and put into a line of credit?
Yeah. I get that question a lot. I am a big person who I never advise HELOCs, home equity line of credit. And the reason for that is, for one thing, there is no tax benefit on that, okay? A HELOC is a second lien to your property, which in other words is already tapping into your equity on your property anyways, right? Okay. And sometimes, typically, a home equity line of credit is more riskier, so the rate is very high. It could be between 10% to sometimes at one point it was almost 15%. Oh. So somebody tells me, he said, well, why would I refinance my loan? I have a 3% rate right now. I'm going to just get a line of credit and I could take it out whenever I want to. Yes, that's correct. But keep in mind, if you are going to go ahead and take out that money, right, you're going to get a probably 11% rate. Plus now you still have your monthly mortgage payment you have to pay at 3%. That's double the rate, right? Yeah. So take it out on a huge chunk, take out the equity at one time, have a primary loan, and then let the money sit there in a bank account, whatever the case is, use it when you need it. But a home equity line of credit is sometimes a huge risk factor. A lot of people get them because they say, well, I don't want to tap into my current primary home. HELOCs is a big no-no.
Gotcha.
Yeah, I only recommend it for big investors who know how to utilize it, who can pay it off quick.
Okay.
And if you're wanting to cash out $50,000 or less or something like that, I would say yes, a HELOC is fine. But if you're wanting to take out a huge chunk, no, I do not recommend a home equity line of credit. And the rate on that is also variable. It's dependent on how much you do take out. So that fluctuates at times too. Mm-hmm. So you just want to be mindful. It is a huge risk to get a home equity line of credit, but try not to do it. Try to just do a first primary refinance cash out.
And to your point, you say because investors who know how to use the money and have it turn back around quickly, and that way the rate doesn't even affect them.
Correct.
And they still have that line open to them.
Correct. Well, whatever they use it for, whatever the case is, whether they want to buy a property cash, the money is there and they decide to flip that property, they can pay it off, you know, yes. But for first-time home buyer, somebody that has a primary home that's been in their home and plan on staying in their home, I do not recommend a home equity line of credit.
Got it. And how would you go about? Is there a different process to purchasing real estate if you were to cash out or with current equity?
Yeah, no. So what happens is there is no different process. What depending on whatever you purchase the next property for, whether it's investment purposes or primary purposes, you would always go ahead. You would have to get pre-approved for a conventional loan. But the benefit here is if you have a huge chunk or a huge cash flow coming in from your equity, you can put a higher down payment. It would have to be either conventional loan and or FHA loan. There is no specific type of program that you would get into. Either it's FHA or conventional. Okay. But typically it allows you to put a higher down payment if you have that cash or the equity cashing out from the refinance.
Okay. And as far as any restrictions, are there any restrictions if I was to take any equity out and use that towards purchasing a new piece of real estate?
Yes. So what happens is, depending on the occupancy status of how you've originally refinanced. So for example, if I have a primary home and I say I want to take out $100,000 from my primary home, but then I go turn around and say I want a new primary home,
Right.
and not allow a certain amount of window time frame, that's a big no-no. That's like a red flag. You don't want to do.
Contradiction.
Correct.
Can't have two primary
That's
homes.
unethical. Right. So now if I say, well, hey, I want to refinance my house, I want to take it out, but this is going to be my investment home and I'm going to buy a primary home, that's fine. So it's just the occupancy status of how you originally refinance is a huge factor. You got to be mindful of how and the status of you refinancing the current home.
Which is similar to if I was just to buy an investment property, right? I can't have two primary homes regardless.
Correct.
So you can't refinance as a primary and then
And turn
purchase a
around.
primary.
Yeah, and turn around. That's completely unethical. Now, there is a window after like a year or so, you can do that, but typically right away, that's just unethical. But a lot of people, and the reason why I can understand is sometimes going back to what you mentioned, the rate, right? Depending on the status of how you refinance, whether you're refinancing on an investment property or cashing out, that affects the rate as well too. But if you're holding it for primary purposes, the rates are significantly better. But there is a seasoning, there is time frame that you have to hold before you go ahead and purchase another primary home.
Got it. And you mentioned earlier a HELOC doesn't give you a tax benefit. So how does refinancing provide a tax benefit if you were to just cash out?
Yeah, so as a primary home ownership, that's something that you want to go ahead and speak to your CPA about, a lot of that. So when you're holding your primary home, you receive something, a tax credit from your lender on the interest that you've paid. And that's a tax benefit credit that you get back at the end of the year for taxes that you've paid and the interest that you've paid on your property. Right. Now, if it's an investment property, the tax bracket might be a bit different. That's when I would advise to speak to your CPA. But a home equity line of credit, it's not a conventional or a Fannie Mae or Freddie Mac product. It is a loan from a bank that's given out based on holding a second lien and holding your property as collateral.
Right.
So just like you get a credit card, we're held at collateral based on our credit score or our income, so same applies for home equity line of credit. It's not a Fannie Mae or Freddie Mac loan product, so therefore the credit does not apply on tax purposes.
Gotcha. Okay.
Yeah.
And are there any other benefits as far as refinancing that other than tax benefits?
So again, it allows you and it gives you the flexibility of having cash flow, saving money for a rainy day, purchasing another investment, buying your boat, whatever the case may be, paying off your debt, being debt free and having just one mortgage, So imagine if you have all this debt that you pay every month, right? Credit cards, boat, whatever the case may be, right? And you take out equity from your home and you pay that off. The interest on those credit cards is so much more higher than you just making that monthly payment towards your mortgage every month, right? So you'll be debt free. Whether the same amount of money that you had paying $200 towards your credit card, you can pay that towards the loan and you'll pay off your mortgage even faster, But the interest rates on those credit cards, your car, whatever the case may be, is so much more higher than your mortgage rate, right?
Yeah.
So, yeah, a lot of people say, well, I don't want to change this. I'll leave my credit cards, this and that. No, pay those off because the interest at the end, you're going to pay more on that than just adding another $200 to your monthly payment.
Right.
And the reason why I say that is sometimes when you remember, keep in mind also too, when you're cashing out, your balance is going higher, right? But also keep in mind that mortgage that you have is for 30 years. So dividing that into 30 years, it might be $100, $200 difference in your monthly mortgage payment than having a huge bracket of credit cards with high interest.
Right.
So it's definitely there to utilize it, take advantage of it, take the money. We don't know what's going to happen, right? So it's like, oh my God. So take out the equity, save it, put it away, or look into an investment purpose, go buy something else for a high, investment property. We always go into the topic of buying something for your kids, when they go to college. Mm-hmm. Do that.
Yeah.
You know, like my goal, well, I don't have, and I'll be completely transparent. I don't have prepaid college for my kids. They have assets.
Yeah.
In the future, the goal is, hey, that's your that property right there. That's your college right there.
Mm-hmm.
You know, that's your future. Well, whatever you decide to do with it, that's yours. Whether you decide to take out money from it and things like that, that's theirs.
Yeah.
You know, so that's another advantage, having assets. You know, so it's always there.
Gotcha.
Yeah.
And my last question would be, I guess, for anybody watching this who does have equity, how can they get started with this whole refinancing process?
Yeah. So the answer to a question is contact me.
Right. That's the answer I was looking for.
Yeah. Contact me. Typically it's it's easy. Give me a call, DM me, and what I can do is we'll take a loan application over the phone, and we'll run some scenarios into place, and we can go over different type of loan options. And I have this great new tool that it will tell me, and we can do like a whole proposal that what you're currently paying and what you will pay and how much money you'll save. So definitely contact me, and I can go over that with you guys.
Yeah, Sunny's not just a mortgage lender; she's a mortgage coach.
Yes.
Yeah. She will coach you and make sure that you understand what you have to do and where you need to be. So
thank you. Yeah. Guys, thank you so much for joining my channel. Thank you, Kevin, for coming. Always.
Thank you for having me.
Yeah, definitely. If you want more information, subscribe to my YouTube channel or click the link on my bio on my Instagram. This is Mortgages with Sunny. If you want questions answered on the YouTube, send me a DM or send me a text message. I'll be more than happy to go ahead and answer them for you. Have a good one.